Welcome back to the channel, everybody. So we have some XRP news today. We have some Bitcoin news today, some Chainlink news today. We have some pretty good information here on some catalysts that could bring up the markets dramatically very, very soon, but we shall see. We'll get to that in a moment. Also, shout out to Matthew. Appreciate you. Matthew, Marky Mark, I Love Life 22, AMPOV podcast. Everybody out there who shows me some love. Did I say Marky Mark already? Keith, legendary Keith. Shout out to everybody, all you viewers out there. I appreciate every single one of you. I hope you know that. So now, this article here is titled, Expert Reveals Holding Just 3,011 XRP Can Place Investors on XRP Rich List. I haven't seen a rich list for XRP in a long time, so that's quite interesting. But only 3,000, that's it? All right, so let's find out what they have to say about this here. It says here, Edo Farina, the CEO of Alpha Lions Academy, highlights the number of XRP that automatically puts investors on the XRP rich list. In a viral video making rounds right now, okay, Farina provided insights on what it takes for investors to be ranked among the top wealthy XRP holders globally. I mean, I suppose if that matters to you, like I just want to make a lot of capital off of it, you know, that's it. I don't care about the rankings at all, but to hear just 3,000, that's it. According to him, investors can be among the top 10% of the biggest XRP wallets. With just 3,011 XRP, Farina indicated that as of June 2024, the number of XRP required to be in the top 10% ranking was around 3,299. That's flabbergasting to me. However, following the surge in XRP price, the number of XRP needed to be in this category dropped to 3,011. This represents a decline of 8.72% within a short period of 3 months. With XRP priced in at 56 cents, these 3,011 XRP tokens holders. Tokens cost about $1,699. Not a lot at all, you know. As of yesterday, August the 11th, Farina claimed that only 523,615 wallets are holding at least 3,000 XRP. Whoa, that's interesting. Despite the number of wallets currently positioned in the top 10% rich list, Farina indicated that an individual may own multiple wallets. I was just thinking that. I'm like, I'm glad they said that. I'm like, wait a minute. A lot of people have multiple wallets. So I don't know how accurate these numbers are, you know, and some people keep everything divided on for a reason. It's like the whole egg idea, you know, don't keep your eggs in one basket. So some eggs over here, some eggs over there, some eggs over there, you know, for safety reasons. It says, for instance, he claims to own between 15 and 20 XRP wallets. Holy smokes. Now, that's a lot. That's a lot. All right. I'm not going to kid you. All right. So then top 5%. Let's see if you're in the top 5% here, people. Furthermore, Farina highlighted the number of XRP required to be among the top 5% biggest XRP wallets, noting that this category requires holding 10,099 XRP tokens. Once again, I say, that's it? I didn't know any of this. This is good information. And these things are always updated, of course. And classified investors holding 10,000 XRP, just 10,000, as sharks, adding that there are 252,594 wallets in this category. According to Farina, investors should strive to hold at least 10,000 XRP. That used to be a big thing, too. I remember a long time ago, people used to say stuff like you only need 10,000 XRP, you know, to be a part of the new 1%. And obviously now those numbers have dropped dramatically. I've seen a lot of different numbers that people have thrown out there. We shall see once everything pops off and the numbers start going up. Then we'll get once the numbers start going up, we'll get a good idea of what the actual explosive nature is of XRP, as opposed to what we just speculate the explosive nature to be. And that's what I'm looking forward to. So now let's move on here. All right, let's move on here, because now we're getting to the real interesting news, because things are going to get shaken up very, very, very soon, in my humble opinion, one way or the other, because the economy has not been doing well. But politically speaking, they need things to go well on both sides within the United States right now. Everyone loves crypto right now. That's what they claim, right? Everyone's going to do something positive for the people and positive for crypto. So now, now certain actors within the communities are taking, not just within the communities, but within the institutions, are taking advantage of the situation, as they should, and then pushing for a more positive energy for crypto. So anyway, wait, let me switch these articles. This one here is an alarming article. I don't want to go over that first. Bear with me one moment, folks. Let me just switch these tabs, please. All right, here we go. Now, this article is titled JP Morgan Chase, Bank of America, Wells Fargo, and Citi predict abrupt Fed rate cuts amid global market turbulence. Yeah, this definitely can happen. 100%. There's a lot of pressure on them right now. So now let's go here. The 4 largest banks in the U.S. now believe the Federal Reserve is about to cut interest rates amid recession fears. Bank of America economist says a September Fed rate cut is a quote virtual lock. If that happens, there's a lot. There's a lot that can occur positively. And this is why it's important to watch where all that value went that came out of the markets, because if they do a Fed rate cut and now people are starting and people begin to believe it's time to play, then that liquidity can move very, very fast. Very fast out of all of those other sources. It can come out of gold. It can come out of mutual funds. Other places. It can be liquidated, move very fast, and it can move back into things like crypto. Bitcoin will benefit. XRP will benefit. Solana will benefit. All those top projects can benefit. It's not a guarantee, but that's why everyone's looking at this. It's just one catalyst. It's one. But if you put together the idea that they may do a Fed rate cut in September, super positive, that there's a lot of pros that are predicting that Bitcoin might have an explosion in the fourth quarter, then that's another positive catalyst. We have a lot of really, really good catalysts coming up. And not to mention, a lot of the negative catalysts are going to be waning. They're going to be going away. This is good. In my humble opinion, this is really good. So we shall see if they do this. But it says a September Fed rate cut is a, quote, virtual lock, unquote, following last week's $6.4 trillion global stock market rout, reports Business Times. Now, once again, if you didn't see those last like 2-3 members only videos, they're not that long. Go watch those. I'm telling you, good information in there, because you want to follow this value. If we're here to make money, we have to know where that money is coming from, where it's going to, can it come back, when it can come back. All of these things are good questions here. And essentially what we have become on this channel, we are our own economists, financial advisors for ourselves. Like we're doing the work. You know what I mean? Not financial advice. I'm saying we're doing it for ourselves. Let's get that clear. Quote, by knowing all that data, knowing all that information, we get to kind of observe motion in the market that most other people are not going to understand. They're just looking at one piece. They're just looking at crypto, or they're just looking at stocks. They're not looking at everything, all the flow of everything, and how they affect each other. Like, for instance, the increase in credit debt, right? How that affects everything, how that affects a bull run on all fronts, right? So anyway, quote, the rate tide has quickly turned, unquote. Analysts at Wells Fargo see the Fed cutting 50 BPS in September and another 50 BPS in November. That would be amazing. But we have read others predicting that as well. They're not the first. Citing deteriorating conditions in the labor market, reports investing.com. The FOMC, quote, the FOMC needs to get back to a neutral stance of policy, or else it risks a vicious cycle of labor market weakness. And I think they know that. Once again, if you listen to all of the different speeches that Jerome Powell did last year, and I didn't listen to them, but I read them. That's the important part. I read when they put out the transcripts. I just read it. I don't like to listen to things too often. I like to read more. This is my way. But they knew this was coming. They knew what was going to happen. Jerome Powell spoke on it. Also, I can't remember the person from U.S. Treasury. My apologies. What's her name? My apologies. Her name slips my mind right now, but she also spoke on this. Everyone knows this across the board, what was going to happen. Some people have to lose their jobs. I'm paraphrasing, but this is what pretty much they were saying. They acknowledged the fact that once you raise interest rates, it's going to affect the job market, of course. But here, This is earlier this month. Data from the Bureau of Labor Statistics showed that unemployment rose from 4.1% in June to 4.3% in July, with the number of jobless Americans soaring to 7.2 million. Wait, whoa. The weak job market, and I told people about that. Ghost job postings. The weak job market data has stoked fears over recession that we know. So we're going to move on from here, okay? Going to move on from here, but that's a really, really good catalyst right there. We're going to keep up to date with these possibilities of rate cuts, right? We want that to happen. That could be good to happen. So now, oh man, listen, make sure, well, I can't tell you what to do. This is not advice. But I would check with all these different companies. Insurance companies have been getting hacked. Banks have been getting hacked. I've been reporting on this. People's social security numbers are getting put out there on the dark web. Do you know if yours is out there? Because listen, what they're doing is these institutions are not letting people know immediately. They're waiting a month, 2 months, 3 months down the line, then sending you something through snail mail that people barely check these days. By that time, your information is out there. And then what's the remedy? Will they give you a few dollars for that when you may have a lifetime of trouble? And now you have to hire a service, or maybe they provide a service where they look out for someone misusing your data, but your data is out there. Your information is out there. This article here is titled 4,300,000 Americans exposed as savings account data breach. Savings account data breach leaks customers' names, addresses, and social security. So much for the security of the banks. They're always speaking about how they're so safe and they're so secure, etc. But you have things like this going on consistently. This leans in favor of the new financial system, which will put I'm telling you, if they wanted to wield it this way, they could. It will put the burden in the hands of the people, put their data in their own hands via DLT services. Right. And then it would take the burden off of the banks, which now have a huge burden on them. Of course, it begins here. Millions of Americans may be at risk of fraud after bad actors breach the systems of the Utah-based fintech firm. Which Utah-based fintech firm? I didn't see that they said. Yeah, they didn't even say which firm it is. That's a strange way to begin an article. It says Health Savings Account Administrator Health Equity. So there you go. Health Equity tells the Office of the Maine Attorney General that it suffered a security incident that, quote, resulted in an unauthorized access to or disclosure of, unquote, the sensitive data of 4.3 million customers. According to a notice sent to customers, the data trove that was stolen may include a member's first and last name, address, telephone number. That's why it's also, you have to be careful answering numbers that you don't know who they are. They're not in your phone book, for lack of a better word, because what a lot of people are doing, bad actors are doing, you're answering the phone. They're recording even a little piece of your voice. They're cloning it with AI and then using your voice to access things and do things. So all of that, picking up the phone to someone you don't know and say, hello, hello. Now they're going to get a sample of your voice. You got to be careful with this, with what's going on out here. If I don't know the number, I'm not answering it. Period. I don't know the text message. I'm not responding. It is what it is. Unless it's life or death. And listen, I know all my people have multiple ways to get me. Most of them are through encrypted methods that there's no denying who it is coming through there. Military grade encrypted. That's just my way. If you know, you know. Right. That's so, yeah. Because someone out there may say, well, how would you know? Mick, what's emergency? Trust me. Get to me through secure methods. That's how the people will get to me. They know. And they were connected. Employee ID, name of employer, social security number, dependent information. Holy smokes, payment card information. Health Equity says not all data categories were exposed for every person. While the external system breach happened, look at this. They're telling us now. I told you it takes months. They're telling us now, but the system breach happened on March the 9th. That's a long time for people's information to be floating out there. The firm says it only became aware of the system's anomaly on March the 25th. So if you're associated with this company in any possible way, or you know anyone that's associated with Health Equity, you may want to tell them to start checking on things. Now, let's move on from there. All right, let's move on to a little bit of Bitcoin news. Yeah, Bitcoin's always looking bullish in my humble opinion, even with the little pullbacks. We said it was going to be turmoil. We read in one of the last videos that experts are saying that there might be a little bit of turmoil, might be a little bit more of a pullback. We shall see. I think I did see Bitcoin was down just a little bit. No big deal in my humble opinion. This article is titled Bitcoin Witnesses 1 trillion. Am I reading this correctly? My apologies. I said 1 trillion. Slap my forehead, shaking my head. $1,700,000,000 in weekly net outflows. My apologies, folks, but I'm feeling good today. I got some good sleep last night. If you know yesterday's video, man, before that video that night I had terrible sleep. You know, I get terrible sleep sometimes. I have a lot of nightmares all the time from certain things, you know. And then I kind of wake up on the wrong side of the bed. It's not too bad, but you know what I mean? But it just affects me throughout the day, puts me in a bad mood sometimes. And I had some good sleep last night. Good sleep, and I feel good. I feel well. Yeah. So this is when I have my best videos, I think. Bitcoin witnesses $1,700,000,000 in weekly net outflows as whales load up on Bitcoin amid correction, of course, as they should, because Bitcoin may explode in the future. I believe it's going to explode in the future. So they're getting in position so they can make some good capital. It says analytics firm Into the Block says that deep-pocketed investors took Bitcoin's correction toward a low of $49,000 last week as an opportunity to gobble up Bitcoin. That is weird and strange that they use that verbiage. Now, a lot of people may speak similar to how I do, but I use that often. Say, oh, they're going to gobble it up. I don't know. These synchronicities weird me out sometimes, folks. Give me the heebie-jeebies. You remember that when people used to use that term? Heebie-jeebies, right? Into the Block says Bitcoin witnessed net outflows to the tune of $1.7 billion from crypto exchanges for a 1-week period. The analytics firm defines net outflows as the number of coins that have left crypto exchanges minus inflows or withdrawals minus deposits. The metric suggests that Bitcoin investors have accumulated more than $1.7 billion in Bitcoin amid last week's dip, considering deposits were subtracted from the data. According to Into the Block, last week's net outflows represented the largest amount in more than 1 year. Quote, this points to large whales accumulating through the recent downturn, unquote. And it makes sense that if they acquired other things as well, it's not just Bitcoin. A lot of these top people are well diversified, not only in crypto, but they are well diversified in crypto. But they're also diversified in the stock market. You know, these people dabble in CD accounts, money market funds, commodities, of course, a lot of commodity, dabbling, fine art as well, a little bit more long term on the fine art. Yeah, so they're well diversified. So yeah, they're going to accumulate a lot of different stuff when these markets go down, just the way it is. In addition, the crypto insights firm notes that retail investors are showing renewed interest in Bitcoin as the count of Bitcoin's daily new addresses witnesses an abrupt jump. Yeah, and just imagine how that's going to be once we get a major mainstream push. And right now, it's interesting. It seems like the mainstream is really taking a Bitcoin, even without a major push. So how much more explosive will Bitcoin and crypto be once we do get a mainstream push? It says, quote, since November 2023, the number of daily new addresses has trended downward, a bearish signal indicating fewer new participants, particularly on the retail side. I called this a long time ago. I said institutions would take over as retail stepped away, and they did. However, the trend seems to be shifting, with the number of addresses trending upward in more recent weeks. This shift suggests, why do they repeat themselves? They repeat themselves again. It's like I already understood the first time you said it. But let's move on here. We have a little bit of chain link news. Just a wee bit. If this article will pop up, my word, what's going on? You know what I noticed is that some of these sites, they're loading up so many different types of ads, that when I have a lot of tabs open, it causes my computer to take some time to bring up those particular articles. This article is titled Chainlink's Adoption Surge, exploring the impact of Link. Link is going to be major in the future. They're already making a huge impact. They're going to be a very, very integral part of the new financial system. That's just the way that it is. And I love the job that they're doing. Keeps me super bullish every time I read a little bit about it. It begins here. This week, Chainlink integrated 4 of its services across 12 blockchain networks, including Ethereum, Polygon, Linnea Build, BNB Smart Chain, Optimism, and Avalanche, among others. New partnerships were formed with platforms like Mavia Game. Is it Mavia Game? Metis, Beefy Finance. Huh? What? What are these names? Cryptex Finance and Gold Link Finance. That sounds respectable. All right. Gold Link sounds respectable. These developments, no disrespect to others. These developments, as per Chainlink's post on X, showcase significant progress in expansion in the fintech industry. Chainlink is always doing a great job. Let me scroll down here. I said that to buy me a little bit of time while this loads up. As these integrations take effect, they are expected to boost Chainlink's influence and contribute to a potential rise in the value of Link in the coming months. Tokenized versus untokenized. Tokenization is still in its early stages for Chainlink, with $170 billion in assets already tokenized, while $1.64 quadrillion remains untokenized. 1.64 quadrillion. And you got companies like BlackRock, Wisdom Tree, Valkyrie, all of the top big companies wanting to tokenize everything. They're fully on board with real world asset tokenization. And I'm going to take a chunk of that. I think that the Bankcoin companies can take a huge chunk of that if they continue to go forward and take RWA seriously. The growth potential in this area is enormous as more assets transition to blockchain. Everything will be tokenized. They already told you that. They told you that before crypto even got popular. They were talking about the Internet of Things. Remember that? And now all these people have cameras in their houses and Amazon popping open their garage when the driver pulls up. And so they're very much involved with the Internet of Things. And that's just an extension of everything will be tokenized. They want to unlock, not just access everything, which is what the IoT is. They're accessing. They can have access to everything. You can see through your cameras, the little cameras people have all in their houses, but they want to access the value. It's what's important to unlock that value. So it's coming. Understand with these institutions, they don't back down. They're not like retail. Retail will back down from time to time. They do. And don't get me wrong, retail has its positive aspects where they don't back down sometimes. But the institutions, when they see value, they keep surging forward until they get the value. And they will. So everything will be tokenized and unlocked. And it's a matter of who's going to be at the forefront of real world asset tokenization, of taking a piece of this 1.64 quadrillion. And I think Chainlink is going to be one of the movers and shakers in there. You're probably going to have something like, if Flare can pull off what they're trying to do, Flare might be in there. Quant will definitely be in there, in my humble opinion. The XRPL will be involved. Stellar probably will be involved as well. We shall see. We'll keep our eyes on all of this activity. So now we have 2 articles left. I have one on, on traveling, not really travel, but like living, digital nomad stuff. And I've been covering that for quite some time. I like to keep the people updated on that as things change. In the beginning, the Yucatan in Mexico, and shout out to all my people in Mexico. A lot of people I grew up with, very close to me, Mexican, love them to death. So I have very, very close ties with Mexico, period. But I'll say this. A lot of people from the United States are moving to the Yucatan. A lot of people to Mexico City as well. But now, from what I'm hearing, it's getting crowded. Some people, that movement that's been happening massively, even though people have kept it quiet, with all those expats, have driven some prices up. Then I told you about the price discrepancy. Sometimes the people get certain special pricing on things because, they don't know how to operate when they get there, And they sometimes get taken advantage of. You get charged a little bit more. You know what I mean? So, the Yucatan right now, I think I think it's at its max from what I'm hearing. Of course, people can still move there. There's still a lot of opportunities, still a lot of properties available. But if you want to go somewhere where there's not a whole lot of expats, people are looking for places like that right now. So other places are on the rise for where people want to move to out of the United States when they're sitting on a lot of wealth or making a lot of wealth. You know, Portugal used to be like that as well. You know, people used to look at Portugal, but I think Portugal also, I'm hearing, is maxed out. This is what are the articles I've been reading from so-called experts. So people are looking at places like Thailand, Cambodia, Vietnam. I'm trying to think where else. I saw an article on Spain, but I'm not sure about that. Wouldn't Spain be maxed out as well? Right? I think also Bali is getting to that place where there's just a great number of you know, expats, so to speak, there as well. So people are looking for alternatives, you know, to where to go. But anyway, we'll cover that another time. Let's end off here with a little bit of gold news. You know, we're going to end with gold. I love gold. This article is titled Gold, Silver, and Platinum Forecast. Gold climbed above the $2,450 level. All right, let's go gold. Gold tests new highs as traders focus on falling treasury yields. Fundamentals remain bullish and gold looks ready to test historic highs. If gold stays above the $2,450 level, it will head towards July highs near $2,480. A move above the $2,480 level will push gold towards $2,500 level. Let's hear a little bit about silver. Silver gains ground as gold and silver ratio pulls back below the 88.50 level. Gold silver ratio is near multi-month highs. In case gold silver ratio starts to move lower, silver will get additional support. A move above the $28 level will push silver towards the next resistance, which is located in the $28.75 range to $29 range. Now let's hear about platinum, because I haven't gotten an update on platinum in a while, just letting the platinum collect dust. But I do like platinum. Platinum is moving higher amid broad rally. Oh, I like to hear that. A broad rally in precious metals markets RSI remains in the moderate territory, so there is plenty of room to gain momentum. A successful test of the resistance at $935, $940 will push platinum towards the next resistance level at $975 to $985. See, the thing about platinum is I'm not long-term platinum. I like to play with platinum. I've bought platinum, sold platinum, bought platinum, sold platinum. It just all depends. I play with platinum. Gold, I don't play with. Silver, I don't play with. Platinum, it's time to play. All right, so now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.